Mish, gosh, what a great person to have here with all the conflicting moves that are going on and a different regime. I've been looking forward to speaking to one of the best intermarket relationship analysts I know. How are
Well,
you, Mish?
good morning, Dale. Thank you. And
Good morning. So I'm wondering how the dysfunctional family is behaving in the last few weeks since the Fed changed their regime for now. If you
well, it
want to
seemed like the family
share your
kind of.
screen.
Sure. Let me get my.
Okay.
Okay, hold on. Let's get to
Everyone
check.
okay? Keith good? Everything's okay?
Everybody's good. Yeah,
All
it's
right.
just it's trying to figure out what the heck's going on. All right, let me just get to the right screen here, and now I have to go back to you and share screen. Yeah. Okay, that should work.
Is that the topic you'd like to cover, Mish?
Well,
The family?
I think it's always a good place to start
Okay.
because after all, what's the markets without the family? The family really pretty much tells us everything we need to know, and then it's outlier relationships really put the icing
Right.
on the cake. And so there's been a couple of very interesting things, and I think very typical of what we're seeing all around. So here's the six of them without cryptocurrency was having its own issues, although it's coming back a little bit off the lows. I've added crypto as my seventh member of the family. But
What
let's
do you
go
call it?
crypto.
Just crypto. Okay.
Yeah, I
It,
haven't come up with an actual
is it
like.
like a cousin or a black sheep of the family or anything like that?
I'm still working on that. It's more like here's the thing. There was a horror movie that was made years ago called You're Next, which
Oh,
is it's tongue in cheek and
I'm
it's
scared. My hair just turned gray.
it's an intro. I love it because I happen to like those kind of movies.
Yeah,
But
yeah.
the reason why I'm thinking about this movie, and it's kind of a little funny way to start the session today, is that a family gets together for, I think it's Thanksgiving or what have you, and they're all together. And of course, there's all kinds of interfighting in the family and all drama going on. And all of a sudden, an arrow comes through the window and kills one of the people in the family. So they're now under siege. And the rest
Yeah.
of the movie, besides trying to protect themselves from getting killed by more of these, it's really a crossbow, a masked person. Besides the fact that they're trying to figure out how to save themselves, it's also who is doing this, right? And
Okay. Yeah.
in my fantasy of the movie, the family is the modern family that's under siege, and each one of them is trying to decide why they're the ones that should be saved. In the meanwhile, they're trying to figure out who the one is actually shooting from the crossbow, and crypto is the one that actually saves the day and survives in my
Interesting.
version. Right.
Nice.
So yeah, so I haven't quite figured out what the actual words or label is for that. So if anybody comes up with something, I'd be thrilled to get some
Well,
suggestions.
in the movie, I don't want to go right to the end of the movie, but I am curious how crypto saves the day in your movie.
Well, it turns out that crypto is the only one that survives and figures out who the killer was.
Okay. I like. All right. Interesting.
Right.
So,
And who
okay. So, I mean, it does. We are headed that way, right?
mm, yeah, and I don't know who's the killer, the government, the
Yeah.
Fed.
Yeah.
But um
Maybe multiple China.
China, well, yeah,
Yeah.
right. So yeah, so far that's been relatively muted, but actually that's one of the things we should talk about today is China, because
Okay.
it's been all over the news this week that Charlie Munger bought tons and tons and tons of Alibaba, and China has done nothing but crash even when our market was going to new highs. So we can get to that, but let's not get too
Okay.
scattered, which I can easily do. And let's focus here on. So I really,
Okay.
to me, one of the most interesting charts is the IWM chart.
Yeah.
So, because I think this kind of tells the whole story right here. If you look back from October, from really basically from February
Yeah.
of 2021 to now, we've been range bound except for that one little blip up that we had right here. So this 207 level, we'll call it 205 to 207. It's hard to be exact, has been the bottom of the range. And this
Yeah.
234, 235, 233, give it a little bit of room, has been the top of the range.
Do you think a lot of people that embrace that breakout that failed are stuck?
I think they probably got a little bit hammered in there. Absolutely. Because this was a pretty decent sell-off from the peak here.
Yeah.
It went down about 10-15%.
Well, yeah, people were waiting 8 months for a breakout. They went with that candle, and 2 days later, we're back at major support.
Right.
That would catch a lot of people by surprise, I think.
Yeah, and we'll take a look at the NASDAQ, which is also very range bound, obviously not clearly as long as we're seeing here in IWM. But
So
if
is
you
this
want,
a bearish sign, Mish? Is that what you're kind of getting at?
this is where the outliers come in right now. If I had to make a bet on which way, I would say, I don't like to use the word bearish because I don't say I'm bearish. I think that we're going to find a range bound market for the entire year.
You're a trader.
Yeah. And the range bound market is probably in some ways easy because if you understand the support, when you're going to buy a dip, you're going to buy against that support, but you're not going to sit in a position for a long time. And I'm saying not for every single instrument, but at least in this situation, you're not going to sit. You're going to want to get in and out quick, right? Because you're buying on the support. And that means you have to sell as it gets closer to the resistance. So in this case, though, I'm going to say more to the negative only because of the fact that this 50-week moving average, I'm sorry, all these emails coming in, the 50-week moving average is actually below.
Right.
And we are smack dab in the middle of the range. And that explains why people are talking about how choppy conditions are. And unless you're in the few instruments that have really been trending, like consumer staples and energy,
banks,
some of the commodities, the rest of the market's been really hard to trade. So this is a really good time to kind of step aside a little bit. I mean, and just looking at this picture, it sort of gives you the whole thing. And I'm not talking about if you're a day trader. I'm talking about if you're really based.
If you're an investor.
If you're an investor and you want to figure out how to position your portfolio for 2022, right now it's mixed. It's very, very mixed. And that will resolve whether it's breaking down under 205 and then we see a move down to 180, or whether we clear, get back over the 230, 234. And, I don't want to say that's impossible. And now all of a sudden, the industrial manufacturing side of the US economy does well. We got earnings season coming up. We have what I like to look at as a January calendar range, which gets set at the end of next week. So you take the first 2 weeks or the first 10 days really of the month of January, and that range becomes good for 6 months. So that's a really good way to see what's going to outperform versus what's going to underperform. So I'm kind of waiting here. I mean, I have more commodities on than anything else.
Okay, so you're a believer in well, the way you do it is, the expression as goes January or the beginning of January. People used to have calendar days that represented a week or a month based on the first week or two. Is that what you're talking about doing? Or you establish the range and then if we take out the high of the range, that means something, and the bottom of the next 2-week range means something?
Well, yeah, there's a 1 month calendar range that a lot of people use where it resets every month, but the January and then again in July is really great. I can show you. Let me show you an example.
It's like a 6-month range.
Yeah, let me show you an example so you can see what I'm talking about here. We were looking at Alibaba. So if you look at Alibaba and I blow this up here, this red line is actually the 6-month calendar range low. And this one was the 6 month, and this was reset in July. The green one is the high. So here's a perfect example is in July, it made its high, couldn't get through it, made its low, broke down. And you can see that really followed a good trend. I wouldn't pay any attention to those lines now because we're going to get a new range for January. And that's
played out.
Yeah. Now that doesn't mean it's perfect. It's not perfect.
What is?
Exactly. You're perfect.
Thank you.
Yeah, you're welcome.
I thought only God saw me that way, but that's great. I'm perfect with all my imperfections.
Exactly.
And all of us are. So, why don't we switch to? I know you talked about most of your positions are commodities because I really want your view on what's happening in precious metals. Although I know there are performers, the grains look great, and you'll probably have some exotics that you're positioned on. You called the bottom in sugar a few years ago. Um, do you think that we're getting close to an entry point on the long side in gold? Maybe above 1700 and silver maybe in the $20 range.
Okay, so before I answer that question, I just want to point out two more things about the
Okay.
macro because it's so important.
See, I'm the
Be,
scattered one.
Yeah, no, and it's okay. And by the way, I definitely want to talk about what you just asked me because people have been saying inflation has peaked because of the
Yeah.
Fed action, and they
Yeah.
don't understand. I mean, it's a rate of change. We're starting at a 0% interest rate, and maybe by the end of the year we'll go to a half to 3/4%. And
Yeah.
yet the rate of change of inflation has put it
Yeah.
close to 9%. I mean, I don't
Yeah.
understand why people think that that's going to put the brakes on inflation, especially since we still have an Omicron situation. We still have a lot of lockdown globally, and we still have even people in the United States staying home. Demand is still low while supplies still remain tight. There's going to be another surge. That's my prediction. Okay. But
Yeah.
anyway, we'll get to that in 1 second. I just want to point out
Okay.
one other thing that's really important. The top half here, which is the retail sector, very important,
Yes.
consumers, the Russells,
Right.
which we just looked at, and biotechnology, which could be
Wow.
both a cyclical and a non-cyclical, have really broke down into caution phases. They were all
Yeah.
under their 50-day moving average. While you look here at the regional banks, went actually to new all-time highs yesterday.
Right.
Transportation, that's the surprise, has really tried here to look like it's possible to break out. If transportation can get over, IYT can get over like 280, 282,
Yeah.
especially on a
So,
weekly closing basis, it would be really hard to be negative because that's showing robust demand.
right.
You just have
That's
to
an
look.
ascending triangle.
Exactly. And you got to just then turn your focus in terms of investments into what things are strong rather than trying to buy the beat up weak stuff. And then
Right.
semiconductors is still in the game. It's floundering here a little bit near the highs, but it's still near the highs. And I've been reading a lot of positive stuff about chip makers like Samsung and Intel and stuff like that. Nvidia, which is now down, but pre-market, but still semiconductors are still in a pocket of strength. So you have a divided family, and that's really important to note because that's not the perfect time to start loading up on swing positions, number one, in terms of the actual equities. And number two, it tells you at some point one of the half of the group is going to be right. Either IWM, IBB, and XRT are going to say, wait, things aren't so bad and rally, or the banks, the transportation sector, and even the semiconductors are going to go, looks like this economy is really slowing down in
Yeah.
spite of the fact that the Omicron, and we could have some kind of a surge come back. Where are we going from there? And then everything can tank. And we're in the middle. So if people telling you that they know, they don't. How can they? Even the family is a little confused right here. And then the last chart I want to show you is really so important. And then we could talk about commodities. And I'm sorry, but I just think
No,
that
I that was great. And I hadn't looked at transports for a while. So, I love doing these interviews because, to me, that kind of changed the narrative for me a little bit with that ascending triangle in transports. I think that's very important.
right. The other thing
Thank
I
you
think,
for sharing
oh,
that.
my pleasure. So the other thing, the other, the other thing to really watch is bonds, and particularly not necessarily the long bonds, although
Junk,
what's really interesting to me about long bonds is that typically they're the safety play. And
not lately.
I've been saying this for like a year and a half now, is like,
Yeah.
what's going to be safe? Is the dollar going to be safe? Maybe not. Are the long bonds going to be safe? Maybe not. What's safe? And that will be a great segue to our potential talk about gold, but let's go
Okay.
here about junk, because this is the ultimate risk on. Okay, so people who don't understand, the HYG is another symbol
Right.
that you can use, but people don't understand why the relevance of junk bonds is junk high yield. They pay high yields on companies that are basically junk. And so when they were in a risk on environment, you see bond traders going in and buying junk bonds. And you can see that throughout this whole move that we've had in 2021,
Yeah.
starting really basically in June, July, after the big thing. And this,
The
by the
COVID.
way, is,
Yeah.
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 So starting here, actually in 2020, after the worst of the pandemic was over, junk
Right.
was not only the first thing to go down, by the way. I mean, junk really told you here in the beginning of 2020 that
Yeah.
here's that 6-month calendar range. It told you it couldn't get
Another one.
through it.
Yeah.
Yeah, right. And then look how tight the range was. It broke down in February under that 6-month calendar
The
range.
simplest things are the most powerful things, aren't they?
Always, always,
Yeah.
always.
I mean,
So look,
be Forrest Gump in this business.
absolutely. And so
Stop
here you were.
complicating
This,
everything.
yeah, here was your box of chocolates right here.
Yeah.
This
Yeah.
told me to get defensive, and this thing crashed. And since that whole nadir, and now that it's back over, it got it back over in the summer, and then throughout 2021. If we start 2021, we had dips and
Yeah.
ebbs and flows. That's normal. But really, we stayed strong until
This.
October. We started to
Yeah.
break down.
Yeah.
And now here we are. We had one little teeny blip in November when we had that little brief rally,
Yeah.
but it didn't last very long, which is why you can't say a rally in a day is a rally. You have to really look over the course of a few days. And this is
Yeah.
where FOMO, people get chopped up to
Yeah.
smithereens. And now look at us. We did hold here at the end of November into December, and we rallied with the Santa rally, but we never got over the 200-day moving average.
Why were investment grade corporates LQD weaker than junk up until the last few days?
Because that's high corporate bonds, and corporate
Yeah.
bonds are basically dealing with a lot of the big companies like Apple and Nvidia and Microsoft and things like that, and they have come off.
Okay.
So
So, all right.
yeah, they've
More
come off the,
fear in the I believe that's the biggest bubble. I think it's with financial engineering, the corporate bond market, I think is bigger than junk now.
I think you got to watch both. And I think that's
Yeah.
an excellent point
Okay.
that you make. Yeah. But I like to look at this in particular. Maybe it's just because I like to say the word junk, but right now
Yeah.
we haven't opened yet, but you can see we're down here. And if we take a look at a longer term view,
Yeah.
well, let's take a look at the monthly chart, because I don't usually show that. In the monthly chart, this is why I say range bound. If this thing
Yeah.
continues to break under this 80-month moving average, it'll go down, which will bring the market down. But do I think
Yes.
we're going into a major bear market? I mean, look where this was in 2008, 2009. I don't think we'll get
Yeah.
down that far. But I do think that if we look back at 2018 and that
Yeah.
level, and even where we started to pop from in 2020, we could get down to around 98, 97. And if that's the case, that's going to be a nasty spill for the market. But
Yeah.
that could also,
Yeah.
yeah, that could also be a good buy opportunity for lots of things. So that's my prediction. We're range bound until these ranges break, but then we could have a good sell off, but it's not like the start of a major bear market. We're not going into a major recession. I don't see that at all.
Okay.
All right, now let's
Fair
go
enough.
to your favorite topic. Well, right now, what's 167.21 bid. So gold, oh God, gold is so freaking frustrating. But it depends on it depends on
Everyone's saying that, Michelle, and that's why I'm interested. And
well,
and it's not because of price damage. It's because it's done nothing. There's a difference between liking something that's been creamed and people not liking something just because it didn't trade to their expectations.
correct. And so
It's
here's the thing about gold is if you look at it on a daily basis, it's, talk about the ultimate chop, 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 chop. Here it
yeah.
is. But again, this is a situation, and here's my inflation conversation right here. Gold so far has been, except for this one great rally, which we caught
Yeah. Yeah.
in 2020. The first place I went to after the whole mess was over and all the stimulus money was starting to come in, because I was like, yay, inflation, it's coming. Not yay, like, because I know it really hurts people, but yay in terms of trading. And I started buying gold and silver, and I did amazing in that. And since then, I've caught little pops here and there, but I've also had a couple of areas of getting totally chopped up. I'm long gold, full disclosure here, not long silver. I was long silver, made money there. Haven't touched the miners because it seems like no matter what I do, I can't make money in the miners right now. So I've stayed away. But gold, here's my feeling. Right now, it's a buy weakness, sell strength market. It's been a buy weakness. Every bear comes out of the woodwork down here, the market goes up. Every bull comes out of the woodwork here, the market goes down. So essentially what that tells me is when that changes, when that narrative changes, when you get to a point where it starts to go up and the volume goes up and you start to see people buying on strength as opposed to selling into the strength, that's not only going to be the sign that gold can go much higher, it's going to be the sign that commodities and inflation is way more out of control than people feared, that the Fed, regardless of their good intention, were way too late to the party, and going from 0 to possibly a 0.5% interest rate is a joke. Then that's when gold can really fly, and that's kind of what I'm looking at. And plus, again, if we look at a longer term chart, you have a really nice kind of I want to call it an inverted head and shoulders because it's not as clean, but you
Maybe that's
definitely,
the handle of a cup. That whole
exactly, it
thing.
could be a cup and handle. And I've seen some chartists who are looking at that sort of thing, but you can certainly see now if we can get through 180 in gold, and especially
Yeah.
on good volume and hold, we could see a really kind of huge move up. So I have a probe position on. I have a stop. I mean, it breaks down under 166. I'm going to be like, okay, there again, little chopped up, take my small loss and keep watching. But at this point now, I'm more encouraged that if it holds this 166 level and we can start moving back up, maybe even next week, and get some kind of a calendar range, that I would be looking at gold as a potential buy. And gold more than silver, by the way. Even though in an inflationary time, silver tends to outperform gold, relationships change. Gold will have two reasons. One is because it's been so undervalued, so ignored, so you could see people running in. Two is where people were convinced that cryptocurrency was the inflation hedge. They can switch that attitude to gold. And three is we really do have some geopolitical crap going on right now that we can't ignore. Russia being the main thing, and oil. And if oil continues to rocket, which I think it will, I am long oil through USO right now, just because it's the easiest thing to get my
A lot of
members.
people have that as their best trade for 2022.
I don't know if I'd say this is my best trade for 2022, but it's a darn good one, because if oil goes through $85 a barrel, I think you can see $100 a barrel pretty quickly, and particularly if things continue to heat up with Ukraine. And then OPEC just basically showed their hand. They're like, yo, we're not raising production anymore. We still think everything is fine. They want prices to go up. Why not? So
China doesn't.
China doesn't, US doesn't, but yet look at what US's attempt was to try to control. I mean, what did they release? It was terrible. Yeah, it was
Jimmy
political.
Biden went to the Strategic Petroleum Reserve.
Yeah, as a political gesture.
Yeah.
Yeah. And I don't even like to go to the political realm because I think you can get into trouble. So that's it. That's it.
All right.
Now, as far as the grains, this is why a lot of people are saying inflation has peaked, because the grains have come off. Here's DBA. But again, people look so myopically at
they're
things.
looking at an hourly chart, so they're bearish.
All right, it's down from the highs, it's peaked. But look at this. This is an 80-month moving average. This is one of my favorite things to look at. If you can extend this back, you could see that really from 2011, 2012, grains were in a downtrend that started to reverse after the pandemic into 2021, cleared this 80-month moving average for the first time in 10 years. So that tells me that we have just started to get going.
Embryonic.
Yeah, exactly. Embryonic. Good word.
Yeah.
And so that's kind of my major thoughts is range bound until we break these ranges. Watch those junk bonds because they could really be a key. But don't think the world is coming to an end, because that would give opportunity in certain things. And in the meanwhile, watch these commodities, particularly this gold. If it doesn't break down under 166 and holds, could be a good opportunity. And think about companies that can not only pass pricing power to customers, but companies that are going to sell things that people need regardless. And even something like medical devices, because all those elective procedures and things that weren't necessary to get done during COVID time
Interesting.
is going to come back. People are at some point are going to be able to go back and get the normal things that they need done. And that could be a real boost for some of the medical supply companies as well.
What do you like better, fertilizer or gold?
Let's see.
Anyway, China's not shipping fertilizer. But I think the theme for 2022 is we went from just-in-time inventory to out-of-time inventory to out of products and out of favor with what used to be reliable suppliers.
Mm-hmm. Well,
I think that's a big picture.
Yeah.
Exactly. We've had so much of everything for decades, and we're oversupplied of everything, and things were cheap. I think there was a paradigm shift that's happening and we're not going to go back to 2019 how things were, and I think shortages, are part of it. And I like grains, especially, Michele, because I don't care what the Fed does with rates. It doesn't print corn or beans, and it doesn't take them down either.
And Mother Nature has been on a tear and looking like she ain't going to stop anytime soon, with predictions of more floods and fires and tornadoes and things like that. Drought, which we're having so seriously here in the Southwest. So so last glimpse here, because I want to talk about China, because you mentioned China.
Okay.
Again, these charts are uninteresting to me. This chart is interesting to me. This is the monthly chart. So first of all, forget about all these Bollinger Band things, except for this red one we're going to talk about.
Channel.
This is a beautiful channel. And if this channel goes back to 2008, and really you could kind of extend it probably even to 2005. And so every time we've touched the bottom of this channel, we've had a really significant rally. Of course, we have some triple tops up here that we've seen, and that's one of the reasons why we've fallen off. But we not only are near the bottom of the channel here, this is a Bollinger Band that I like to look at. It's almost like a mean reversion type Bollinger Band, in that when it breaks and comes back through, it's significant. Now, in this case, it touched, it never really broke. But what I'm looking at, and you could see that China's actually bid up right now, it's up 1.45%. If we get a close over the low of, or the close of last month, which is 36.58, so I'm calling it about 36.60, this could mean that the relationships in the markets on China so underperforming the SPY could change a little bit as well. And so, and maybe that's one of the reasons why Munger is so hot on Alibaba, but I like to look at the ETF. So this is something we're not in at this point, but we're looking at, and I think your risk is clear. If your risk would be really basically, you give it a little, if you really want to give it room, you give it room to around 34. If you want to play it tighter, all you have to do is give it to the low.
It's at an inflection point. It's good or bad from right around here.
Yeah, you're wrong under 35. And if you get it right, you could probably get a move up to about 40, 41. And then you reevaluate.
You're the best, Michele. Show your website.
Okay, let's see here. My website. Oh.
And you can follow Michele on Twitter at Market Minute. Great content on Twitter. And, Michele's so sharp.
All right. Thank you. All right. I don't know. For some reason, you're getting a.
Okay.
Oh, by the way, my report, this is why this is here. 2022 trends, themes, and trades to watch. I give you a lot of information. I talk about China. I talk about the year of the tiger coming up. I give you 20 of my top picks, everything we've talked about in detail. You can get it if you just click here, it's free.
Okay.
All
Wow,
right.
nice
So,
offer.
yeah. So there you go. That would be my parting words, is go pick that up, and it's a good weekend read.
Have a great 2022, Michele.
I'm sure I'll see you again.
We'll set something up. I'm a fan, always rooting for you and Keith, and hope you have a wonderful 2022, and that all your, all your pips are green. And
Thank you.
really appreciate you being here with us. And it's great to laugh and learn at the same time. You and I could do that.
Yes, we can. Oh, that's
All
what it's
right.
all about. Never take anything too seriously.
All right,
Except,
Michele.
all right.
Except what? Except
your
what?
health. Your health.
You're right. Okay.
Yeah. Okay.
Thank you, Michele.
All right.
Everyone.
Bye-bye. Thank you,
Michele
guys.
Schneider at Market Minute. Check her out. She's definitely part of my intelligence gathering. So I'll talk to you guys later. You could join the team on the Morning Edge in 10 minutes. You're welcome. People are thanking you, Michele.
Thank you.
And everyone have a great weekend. Remember, don't just count your grains or your transport indexes, anything. Count your blessings and tell the people you love, vocalize it. They're not mind readers. And have a great weekend. Look at your monthly charts and consider being part of some community. Okay. It's important to surround yourself with like-minded people. Adios. And Steve Volge, I hope you and your family are feeling better. Look forward to hearing you Monday. That's an order. Adios.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.